in different directions because of their differing outlooks. And I'm wondering which is a bigger opportunity, because now Target is much cheaper than Walmart, I guess because of all that discretionary exposure. So which one do you buy?
We're definitely buyers at Target. At the end of the day, the consumer is weakening. Discretionary purchases are softening. Your anniversary and earlier holiday last year, so that's exaggerating the weakness. But it's still, you still need more promotions for the consumer to buy all these COVID-winning categories like apparel and electronics. That's a much bigger portion of Target's mix, and they're deflationary because of all the promotions. All of Walmart's comps is food, and it's all driven by inflation. Food inflation up mid-teens. Their food business, 60% of the mix up mid-teens. As you look out a year, the way we think about it, one, you want to get ahead of the earnings revision curve. Target's numbers have come way down on all these markdown and supply chain issues. We get those back next year, and you can be more optimistic the further you look out in the consumer. On the Walmart, you know, in a hard landing scenario, what typically happens is the consumer gets worse, and then all these safe stocks and safe categories start underperforming, and food inflation is peaking. And then, so lastly, if you end up in a scenario where the Fed starts lowering or stops raising, you want to own discretionary names. So we really want to be long and buying Target. The stock's holding above its June lows, so we'd be active buyers here.
13 times. Walmart's trading at 20 times price earnings. So there's a valuation gap as well. Chris, what about what they mentioned on shrinkage? What is the problem here? They mentioned organized crime and how they're having to invest more to work with law enforcement. Other retailers are experiencing this as well. I just wanted to bring it up because I thought it was notable. It was mentioned twice on the earnings call.
Yeah, I mean, so if you go back a couple years, Home Depot started talking about that. And in fact, CNBC did a whole piece on this, how you have organized crime, and they were going in and stealing basically battery-powered hand tools and going out. E-commerce has enabled this to be sold online. So they were discovering warehouses full of Home Depot and other companies' products. This has now moved forward into the electronics category, and now you're starting to see it hit more of the Targets and the Walmarts of the world. So it's bigger ticket, kind of durable products, could be small kitchen appliances, electronics, and it's ending up at a warehouse and then being resold online. All these retailers are really trying to do different things. Home Depot's testing locking things up. Home Depot's testing with the manufacturers, basically giving a key to turn the product on when you actually pass it through the register. All those efforts are pretty early on, and what we really need is more of a legislative and more of an aggressive industry solution coming down from state, local, and the federal government.
So my final question, since you like Target so much, is are you satisfied with the measures they've taken to bring inventories down? Because that was the big risk around this stock and Walmart's earlier this year, that they just had way too much inventory and they had to unload it at very promotional prices. We thought this kind of stuff would be over. Now there's concerns about demand. So first of all, are they dealing with the inventories in the right way? And second, are they in the right product categories? Can you really chalk this up all to consumer discretionary spending weakness from the macro environment?
You know, if you disaggregate Walmart versus Target, Walmart is basically 70% grocery plus prescription and healthcare. You know, it's a lot different for Target. Target's basically 55% general merchandise, home decor, appliance, small kitchen appliances, electronics. So they have a much longer lead time, and those categories are the ones that are big COVID winners that are now hyper promotional in order to drive sales. And it's also up in mix in the fourth quarter. So they're still a little heavy as trends in general merchandise slowed through Halloween, through the election and the first part of this year. They're still a little heavy, but we have a very high degree of confidence that they will be clean. They are in a much better spot than they were 1 and 2 quarters ago. I think you enter into 23 clean, and then that's what drives the visible margin recapture in 23, and why we think ultimately you'll start to see this upward revision cycle for Target inverting what just happened over the past year.
Chris Horvers, thank you.